Investors, hello. This is Stock AI Insights, your chief AI analyst. Educational reference only, not investment advice. Investing involves risk. Today, we're deep diving trading news on BLOX ETF, NYSE Arca BLOX, surges in yield at 36% amid crypto pullback. Oversold and primed for rebound. Key market insights in just minutes. So let's start with the big question, right? Can you actually turn all that crypto chaos into some kind of consistent cash flow? I mean, in a market that's famous for its wild roller coaster rides, finding a reliable income stream can feel, well, almost impossible. But today, we're going to dig into how one ETF claims it can do exactly that, all based on our source article. To even begin to answer that, we have to set the stage. The crypto market is, to put it mildly, turbulent. And as we're about to see, recent events have really just cranked up the volume on that reality, creating a huge challenge for anyone looking for stability. As the trading news article points out, we've just seen Bitcoin take a serious tumble. We're talking about a drop from over $70,000 down to $55,000. That's the kind of whiplash that makes it incredibly tough to rely on crypto for any kind of stable income. And that right there, that's the core problem we're talking about today. Okay, so if that's the problem, what's the proposed solution? Let's dive into the fund at the center of the article, the Nicholas Crypto Income ETF, which trades under the ticker BLOX. We're about to see that its whole structure is really different from your average crypto fund. Now look at this chart. This really shows you their hybrid approach. It is not just about holding crypto coins and hoping for the best. You can see only 40% is in crypto assets directly. It diversifies into the entire ecosystem that surrounds it, 30% in miners, 15% in trading platforms, and even 10% in semiconductors. This multi-layered strategy is really the key to what they're doing. And this slide right here shows you what that looks like in practice. The fund holds big, established crypto ETFs like Fidelity's FBTC, major miners like Marathon Digital, and, get this, crucial infrastructure companies like Coinbase and even NVIDIA. It just shows that this isn't a bet on a single coin. It's more like an investment across the entire crypto economy. So we've seen what's under the hood, but the billion-dollar question is, how on earth does it generate such a high level of income? Well, this is where we get into the fund's secret sauce. Its core mechanical advantage, as the article puts it. 36%. Yeah, that's the headline number from the trading news piece. A 36% annualized distribution yield. You know, in a world where every single percentage point matters, a number like this absolutely grabs your attention. But the real question is, where does that yield actually come from? The article uses a fantastic metaphor here. Think of BLX like it's a landlord for its crypto assets. It's not selling those assets to generate cash. Nope. Instead, it's using a clever option strategy to collect weekly rent in the form of premiums. This whole process is designed to turn market volatility, usually the investor's worst enemy, into a potential source of consistent cash flow. Pretty neat. And here is a super critical detail for investors, especially when it comes to taxes. A huge chunk of those payouts, we're talking 68.6%, are classified as return of capital, or ROC. This means it's not taxed as immediate income. Instead, it just lowers your original purchase price, pushing that tax bill way down the road until you actually sell your shares. For a taxable account, that's a pretty significant advantage. Okay, a 36% yield is definitely impressive, but it doesn't exist in a vacuum. How does it really stack up against the competition? Well, the article gives us a direct, head-to-head comparison with another high-yield fund, LFGY, which gives us some really valuable context. So on the surface, LFGY's 72% yield looks absolutely incredible, right? But, and this is a huge but, the article points out a critical trade-off. While it was pumping out that massive yield, LFGY's share price fell over 31% since January. Ouch. In stark contrast, BLOX, with its lower yield, has actually managed to deliver a positive total return of over 10% since it launched. This table really digs into that key difference. The article states that BLOX prioritizes growing its net asset value, that's the NAV, first, while LFGY is all in on chasing income. You can see the result crystal clear in the Sharpe ratio, which is just a fancy way of measuring risk-adjusted return. At 0.68, BLOX ratio is way higher than LFGY's 0.41. In simple terms, this suggests BLOX has given its investors more bang for their buck risk-wise. All right, let's shift gears from past performance to the article's forward-looking analysis. The author over at Trading Newsy pulls out some key technical indicators to really frame a tactical viewpoint on where BLOX stands in the market right now. This slide highlights two really important data points from the article. First, there's no sugarcoating it. The fund has taken a 40% hit since October. But second, it maintains this incredibly high correlation of 0.84 to Bitcoin. That means its fate is still very, very closely tied to the broader crypto market. And that big drop brings us to this key technical indicator, the Relative Strength Index, or RSI. The article reports that BLOX RSI has cratered all the way down to 28. Now, in the world of technical analysis, any reading below 30 is widely considered to be deeply oversold territory. So why does that oversold signal even matter? Well, the Trading News analysis points to history. It notes that in the past, whenever BLOX's RSI has dipped below 30, it has often been followed by a relief rally of anywhere from 10 to 18% within the next 4 weeks. Now, of course, past performance is no guarantee, but that's the historical pattern the author is using for their tactical outlook. And this all leads us to the author's final verdict. And I'm quoting directly from the source here. Buy on oversold weakness, high-yield crypto exposure with NAV cushion and institutional appeal. The whole thesis really combines that high yield, the oversold technical signal, and the fund's focus on preserving its net asset value. So key takeaway, the Trading News article positions the BLOX ETF as a unique tactical opportunity to get high-yield, tax-advantaged crypto income, arguing its oversold status and NAV-focused strategy make it an appealing buy during market weakness. Share your thoughts in the comments. See you next episode.